Good afternoon, everyone. Minerals 360 has been on a fantastic journey over the last 6 to 9 months. I presented at the RRS conference in September in the Gold Coast, I think it was, and we said we're working on something big, so hang tight, and this is what we were working on. So Bullabulling Gold project is one of the biggest undeveloped open pit gold projects in Australia. It sits just outside of Kalgoorlie. It's been sitting dormant in a large $100 billion Chinese company for the last decade or more, and it is our plan to reinvigorate it and get it back into production. So we have just completed a $220 million cap raise that closed last week. We had brilliant support from international and domestic institutions, as well as very loyal high net worth individuals and retail investors that we already had on our register. So after that cap raise, the structure of the shareholder profile looks like that. Strong institutional support, particularly from long-only gold funds in North America and Europe. Market cap today is around $250 million. We just came online this morning at 10:04. We went through a full recompliance process. The reason for that is we were a $30 million market cap company prior to this acquisition, and the rules aren't written for companies like that to do big deals like this. So we went into suspension on the time we signed this deal. A full prospectus came out in February. That is a brilliant resource for you. There's about 440 pages of independent technical and legal and financial work for you to read. It's not written by us, it's written by independent experts. So essentially the way to think about it, it was a re-IPO of an existing company. That's how much information is out there. Our biggest shareholder is Tim Goyder. Tim is also the chair of the company. Tim is also the chair of Liontown and Chalice, two companies that have presented here a lot. In that $220 million cap raise, Tim contributed $12 million. Every other director contributed at least $120,000. So if you want to see confidence in a project, look where the money comes from, and every single director in our company has invested in this capital raise at no special term, at the exact same term as retail and every other institution. From a team perspective, look, you don't accidentally build great companies. You need a great project, you need a strategy, you need people, and you need capital. So on the people side, as I said, we've got Tim. You're not accidentally successful for 50 years. Alex is here somewhere in the room, another brilliant company with Chalice. Liontown, like I said, now a multi-billion-dollar company. It's great for me to be back here in Adelaide. I worked at Oz Minerals for a few years, joined it with just Prominent Hill, and by the time we left, we transacted with BHP on that $9 billion deal. Emma Scottney, great gold experience and legal experience. She's also on the board over at De Grey and Santana. Dave Richards, again, very well known, given his decade or more as the MD of Liontown. He discovered Kathleen Valley. Dave always wants people to know that he was a gold geologist before he was a lithium geologist. So he had a 30-year career in gold before he went into lithium. But he had discovered the Viranansi gold deposit in Queensland, incredibly successful and incredibly involved in our due diligence and planning going forward. Stacey and Jamie, our CFO, and Stacey and Ned joined us in the new year as well. And not a coincidence, given Stacey comes from DevEx and Jamie comes from Chalice. Thanks again, Alex, for lending us Jamie. What we have is a stable of fantastic people. We've just added Brad Walker as our project manager. Again, great gold and, precious and base metal experience, and he will lead the study for us in the next 12 months. So I've kind of already touched on this timeline, but in the last sort of 3 or 4 months, we've been pretty busy. We signed the deal on the 1st of January, full prospectus in February, a shareholder meeting in March where 99.15% of shareholders approved the deal. We successfully completed our $220 million cap raise just a couple of weeks ago, came online today. The next 6 months are going to be just as exciting and just as fast. So from a drilling perspective, the pads are actually being cleared today. The rigs arrive on Monday. They start turning on Tuesday. We will drill 80,000 metres in the next 4 to 5 months using 3 to 4 rigs. The data comes in pretty quick. We will have a whole new resource update by the end of the year. So this resource won't stand still at 2.3 million ounces for long. It will move ahead. It will move up. We're very confident about that. and I'll show you some of the exploration slides in a moment. So some of the highlights, and this is certainly some of the reasons why we got excited by this project. 2.3 million ounces sitting on granted mining leases just outside Coolgardie is rare. So from an acquisition perspective, almost the majority of deals for gold are under 1 million ounces or more. Something above 2 million ounces is rare. If you look at Spartan, if you look at De Grey, they're all obviously all above 2 million ounces. So it's hard to get 2 million ounces. It's hard to acquire 2 million ounces. The other unique facet of this deal was that we were buying it off a $100 billion company. Regardless of the nationality, $100 billion companies are pretty hard to deal with. And so again, that was one part of the reasons why this deal took quite a while. There's been 12,000 holes drilled into this project for the 2.3 million ounces. 11,500 of those holes were drilled when the gold price was $600 or less. The reason why that's important is because what we see in the drilling database is regardless of what the grade is at the end of the hole, it just stopped. Because it makes sense not to keep drilling when the gold price is $500 or $600 an ounce. What we will do with a completely different context, with a completely different gold price, is drill deep. So we have an 8.5 kilometres of strike. It is completely open down dip. So the lowest hanging fruit we see is to drill very deep and a lot of holes. And that's why I say we're confident that the resource does move upwards by the end of this year. From a metallurgical perspective, in the most positive sense, this is boringly simple. It's amphibolite rock. It's the most common Eastern Goldfields rock. The Mungari mine, 25 kilometres away, is the same rock. It'll process fine. It'll grind fine. There's no funky byproducts. It'll just be your boringly simple, but pleasingly simple CIL plant. We have a native title land use agreement in place. That came across with the project. We've already established a very good working relationship with the traditional owners. This is the same traditional owner group that have the claim over the Super Pit and Mungari. Very commercial group, not going to be a problem at all. Like I said, our 80,000 metres of drilling is already planned. It starts on Tuesday. I'd be very surprised if we stop at 80,000 metres. 80,000 metres is what we know today. With about $50 million in the bank, we've got more than enough cash to keep going if we wanted to. And then the location of this is fantastic. We're 45 minutes drive from Kalgoorlie Airport. Our workforce will be a combination of driving in from Kalgoorlie as well as flying in from Perth. So access to infrastructure, the roads, the power, the water, the communications, the services are literally on our doorstep. We actually put this slide together for international investors because, without being too disrespectful, the Americans don't understand the difference between Australian states, so we put the Western Australian thing together. But it actually works in Australia too. Western Australia is an incredible place to develop a deposit. The government understand it. It doesn't matter what party is in power, the government understand what is needed to develop mining, whether it's at the exploration stage or whether it's in the production stage. It is a fantastic place to work. On top of that, we've got the workforce close by in Kalgoorlie, like I said, and then we're surrounded by other gold miners. So we're in essentially an ecosystem, one of the best places in the world to develop a gold mine. I've probably run ahead of my own presentation here and touched on a lot of these things. One of the key aspects of this is also the mining lease. The whole resource, the whole 2.3 million ounces, and every single drill hole that we will drill this year will be contained within that mining lease. That means when we come to put in our plans for development to the government, as long as we stay within that mining lease, and we will, that allows us to get back into production in 3 years or less. So that's the target, and that's enabled because of that mining lease. The resource I've talked about, infrastructure I've talked about, this is a very well understood asset from a technical perspective. It was defined or discovered by Western Mining in the 80s. Nick Georgina, the famous or the godfather of gold industry, owned it for about 10 months before he was bought out by Resolute. Resolute mined it for about 5 years in the late 90s. Zygen then bought it in 2012. Everyone through that time has reinterpreted the resource, and it's been consistent in grade and consistent in scale. So we pick up a very well understood resource in addition to the due diligence that we've completed ourselves. We have about $50 million left in the bank after we've raised our 220. Most of that went to obviously paying the vendor for the mine itself. And then we have the team, like I've talked about. So we have what we believe are the ingredients for success. It's now my role to lead the company into that. So here we see the resource for the first time. So what we have is largely homogeneous mineralisation, structurally controlled, dipping 40 degrees to the west, hosted in amphibolite rock, like I said. The deepest part of the pit is about 240 metres, or the resource is 240 metres. We know it's completely open down dip, and I'll show you the image in a minute. Those 12,000 holes support the interpretation of the resource. It's incredibly well interpreted. The competent person is actually Snowden Optero, so we have an independent consultant from the interpretation perspective. And this is very shallow drilled. So 99% of the holes, like I said, were drilled when the gold price was much lower than where it was today, and then also at a depth that you would drill much deeper than what they've previously done. So 60% are 50 metres or less. And we've got 2.3 million ounces, and it's open all along strike and all down dip. So that you could see why we got excited by it. There's a lot of targets for us to drill. I've defined 8 in a couple of slides' time to show you where we're going to be drilling, but essentially, like I said, you would be surprised if we do stop at 80,000 metres. From a classification perspective, within that 2.3 million ounces, we've got 1.4 already in the indicated category. A lot of that is in the Phoenix and the Dixons areas of the resource. A lot of the drilling to support that indicated is already 20 by 20 or 20 by 40. So to upgrade it into a reserve, we actually don't need to do that much drilling. A few diamond holes to support geotech and some metallurgical work, but not a lot more. The majority of our drilling will be extensional drilling, particularly down dip, like I keep saying, and then along strike. And this is really the image that sort of, to be honest, is my favourite image. It shows you the whole mineralisation through the long section. It's all open. So it's up to us now to drill deeper, add more ounces. We know already from the existing resource that from an ounces per vertical metre perspective, it's between 10 and 20,000, and it gets higher the deeper you go. So to give you a rough calc, if we can add another 100 metres to this resource at that ounces per vertical metre, we add between 1 and 2 million ounces. And that's just from another 100 metres of drilling from where we are today. Obviously, we go deeper, we get more ounces. We know the basement rock is about 500 to 600 metres below us, and we know it's a mafic unit all the way through at the contact point with the granite plug on the eastern side. So from an exploration plan perspective, these are really the 8 areas that we're going to hit. About 15,000 metres will be infill, about 35,000 metres will be down dip, and then the remaining along strike. So up north, we're chasing depth extensions at Dixons. Dixons is a great zone. It's previously mined as well, so we can see the historical pits, we can see the geology. So again, we're confident of adding ounces there. That Phoenix pit is currently modelled to be about 3.5 kilometres long, 600 metres wide, and on average about 120 metres deep. So our goal is really, to be frank, make it bigger, make it longer, deeper and wider, and that's what our drilling will do. And then we've got the regional targets. So the pleasing thing about the resource, and when you do acquisitions, you often pay for upside that doesn't exist. So what we have done is only paid $72 an ounce for 2.3 million ounces. All the upside I'm talking about, particularly along strike, essentially comes for free, except for the drilling costs that we have to pay, of course. So the strike extension is really exciting as well. So between numbers 5 and 7 is 6 kilometres of strike, shallow drilling, previously tested to confirm the mineralisation by Resolute in 1998. They were looking for laterite material, didn't find it, but found other mineralisation there. And so we come along 30 years later and we say, thank you very much, thanks for telling us where to drill. And that's exactly what we're going to do. So our goal is to connect that little Gibraltar icon, which is in the corner there, to the rest of the pit. So the goal here is to create a significant sized pit that increases your economies of scale, that lowers your all-in sustaining costs, and it increases your margin, of course. So we're just at the beginning of this timeline. We've just completed the transaction. We started trading today. That 80,000 metres of drilling will start on Tuesday. News flow will start very quickly. We will update the resource by the end of the year, but I wouldn't be surprised to see us keep drilling afterwards. Our study has already started, and we're not coming from scratch. So for those of you that owned Bullabulling Gold in 2012, 2013, before it was taken out by Zygen, you may remember they did produce a full PFS. We've got all that data, we've got all that information. That's our starting point. We start from that. We will update that to have a quick PFS. We will then come out with a DFS and FID around the middle of next year. We will then continue with those final approvals into mining. About a 15-month construction period. That can be fast because of the location where we're at. And by the second half of 2028, we're producing. So that's the journey we're on over the next 3 years. So just to recap, why would you buy our stock? We've just completed a fantastic acquisition. 2.3 million ounces is rare. Acquiring from a $100 billion company is even rarer. We've bought it at a great price. So we've bought it for $72 an ounce. Since we bought it, the gold price has moved up $400 an ounce. So we're very pleased with the timing of this. We're aiming for production. So we're going to do some exploration. We're going to do the study, and we're going to build, and we're going to put it into production. We're not coming from scratch. So there's been about $80 million worth of investment into the project already. We've got all that data. We've got the database from the 1980s when Western Mining were drilling there. And then we're led by a great team. Tim Goyder is the chair, myself as the CEO, strong board, continue to add to the team with highly reputable and highly experienced people. We think we've got a great company. Thanks very much.